Investing in real estate doesn't have to be the same old way every time. If you haven't invested in real estate, there's all kinds of different opportunities out there. In today's episode, we're going to explore those opportunities and shed some light on how you can get into real estate investing.
The Den, powered by the Lyons Group, a show dedicated to exploring hot topics in real estate, local happenings, and industry trends. We're a small team of professionals approaching $400 million in sales and nearly 2,000 local transactions. You're listening to time-tested experts and industry leaders. Here's a refreshing look at real estate happenings and more. Welcome to The Den.
Hello, everyone. Welcome to this episode of The Den, where we're going to talk about how to invest in real estate, and maybe not in the traditional sense, because there's all kinds of opportunities out there to get into the real estate game. But before I get to that, let me introduce my friends, my partners, my co-hosts, the fellow members of the Lyons Group. To my left, Paul, Hammy the Rockberry, Aspen the Ninja Groen, and the boss, Shannon Martinez. My name is Ben. Opportunity abound, Lyons. I'm an optimist. Paul, you know I'm an optimist.
Opportunist.
That's a better word, Aspen. Opportunist. But there is opportunity abound in real estate.
I think we have to start approving these nicknames you give yourself.
Run them through the filter.
Yeah.
I can put it in AI and say, give me something now.
I thought you were so scared of AI.
I am. I don't know. It makes me nervous. It makes her nervous too.
It makes me really nervous.
Her Alexa's going to wake up you're going to wake up.
It's going to be looking over me, the little screen.
Yeah. It's like wobbling toward you. Yeah. I remember what you called me, Aspen. Okay. So let's talk a little bit about investing in real estate. And in the traditional sense, most people think like, okay, I'm going to go out and buy a house. And then I'm going to flip the house, or I'm going to go out and buy the house. I'm going to turn it into a rental. And those are like the two ways that people think about investing in real estate. But really, is that the only way? And what are some of the other ways? And how can it be beneficial? Because not everyone wants to be a landlord. I mean, right. Shannon, from
I don't want to be a landlord.
You don't want to be a landlord most of the time.
Yeah.
It's not for everyone. Now, having said that, there's all kinds of different creative ways. Aspen, why don't you kick us off on one of the creative ways that you would think outside of the normal, go buy a home, sit on it, or go buy a home and flip it?
So the things that I'm a little bit more familiar with would be REITs, which is really easy for people to get into. I think it sounds really complicated, but it's easy and affordable to get into. There's wholesaling, a little bit harder. You can buy property tax liens. My first house was actually an auction house. So there's so many different things you can do to get into real estate. But I think if I was not wanting to go the traditional route of putting down 20 to 25%, maybe flipping a house or just becoming a landlord, REITs is what I would look into. And those are real estate investment trusts. So that's just, you're basically investing in like mutual funds. You can even do it on Fidelity, Robinhood. It's very accessible now. It used to not be, but basically you're coming in with, $150 and buying one mutual fund or one REIT towards the property. So a lot of malls, hospitals, nursing homes, they're all owned by REITs. So REITs are great too, because once you invest in it, it's just like a mutual fund where they have to pay out typically 90% of the investment back to the investors. So you're getting a consistent payback. There is some
they don't really, do they call it a dividend or?
Essentially, yeah. It's 90%, 90% dividend to the investors. So it's nice to just dip your toes in. And, it's kind of like whenever you're getting started into cryptocurrency, you're probably just going to start with Bitcoin because that's what you know. But eventually you're going to start branching out to all these other options that there are. So starting in REITs is a good way to dip your toes into real estate because it really is pretty low risk as far as the funds that you're putting in. You're not putting in $100,000 on flipping a house.
Yeah. And everyone knows we're not financial advisors, obviously. Attorneys or accountants. We are just four normal talking heads that have had some experience in this. But Aspen, I say that to say this. So do you think that someone could, if they have a self-directed IRA or just a normal retirement account, can they invest in REITs?
Yes. So that's actually one of the best ways to do it, because if you have a REIT through your just through yourself and you're paying into it, whenever you get paid back, you're going to be getting taxed on that. If you have it through your Roth IRA, you don't have to pay taxes on that. So I think that's the best way to go about it. Again, I don't really know taxes and accounting. All I know is that's what I do. And that seems to be working pretty good.
Do you have like a general sense of what returns you get? I mean, are you talking 6%, 8%?
It's
12%?
relatively high.
Yeah.
I don't really know the percentage. I just dabble in that myself and cryptocurrency. So those are the two things I kind of just do myself just for fun to mess around with it. And it's gone up quite a bit over the years, but I will say it's not a full-time job. So it's probably could be much more efficient than what I'm doing if I had someone else handling it for me.
Yeah. And one of the things is you don't know what asset you've bought, right, with a REIT, or they actually give you a breakdown of which assets you're investing in?
Yep. So you can kind of pick if you'd like to, these seem to be really successful, but a lot of malls are owned by REITs. So with malls kind of not doing as hot, I might stick away from that. I think nursing homes, they're not going to go anywhere. Kind of sounds a little bit, but someone has to fund them, hospitals, that kind of healthcare, those things. So you can pick which one you like. Now you can't go, as far as I know, I'm going to do it for this property specifically.
The mall in Austin or whatever.
Exactly.
Yeah.
But you can pick the general sense of what it is.
Okay. So you can kind of pick the categories there. And so that is certainly one of those. It's more like a mutual fund almost.
It's exactly like a mutual fund.
And then you can invest that money, have a pretty well realized safe return, although it is on the higher end from what you're saying.
It is on the higher end. And you can look and see. So they'll tell you, it's just like REITs.com. You can go and it tells you what the average return is, and you can see how long they've been doing it for, how long they've been. It's basically a publicly traded. It's exactly the same as mutual funds. You can see the history on it. If they have ever gone belly up on any of them, how many times they're in the positive, how many times they're in the negative. So it's exactly the same. Yeah. So if you're familiar with investing in mutual funds at all, REITs are going to be really familiar to you.
Yeah. Yeah, that's a great option for someone looking to get into real estate. Just dip your toe. That's dipping the toe in the water.
It's like a really, really big co-op, and you're not the one making the decision. So that's where it kind of gets nice.
Putting those in capable hands. Speaking of capable hands, don't look at me. So how much what's it?
Dogecoin.
Dogecoin. How much Dogecoin do you own, Paul?
I have some.
None.
I think it's actually done pretty good, hasn't it, Aspen?
Yeah.
Yeah. So
I mean,
there's a little dog
really
on
good.
the front.
Yeah, it did really good, and then it did really bad. Yeah. And now it's just there.
So, but when all of this stuff was coming out, I was the biggest naysayer. And of course, everybody that did it, has either horror stories or really good success stories. If I could go back in time, right? That's, invest in Yahoo. What movie is that?
Was it Back to the Future?
No, that was betting on horse races.
No, betting on
Hot Tub Time Machine.
That's what it is.
Oh, yeah, that's right. Yeah,
good job.
That was a good one.
If I could go back, I would buy vacant land and try to develop it, or buy some land. I've been trying to get my brother-in-law to do this with me: is buy some vacant land and set up self-storage units. That seems to be the big ticket right now.
Yeah, these are low maintenance. They're really efficient to build,
and every one of them in town are 100% packed.
Yeah.
RV storage too.
Mm-hmm.
Yeah.
But those are expensive. Different ways. Getting into commercial real estate can be pretty expensive. Yeah.
So lay out some thoughts on if you were to buy some land, because there are a lot of land developers out there that, that's their whole game is, and especially in like the Phoenix area. I remember in 2003 or 4, we met with a group down there and they were like, Phoenix is going to blow up and we are buying all the land as much as we can right around the municipalities. So they'll annex it in. And I'm curious to see where those guys were, because they were putting together millions of dollars and wanted us to be a part of it. And at the time, we just weren't in a position to really invest much into that concept. Although I thought it was good. They made a killing, but walk through some thoughts, Paul, on, if you were looking to get into it, what kind of land would you be looking for and why?
For self-storage?
For self-storage, for anything. Anything you think is going to appreciate or to develop.
If I was going to do a self-storage or an RV storage or something like that, I would be in a convenient location. I was just talking to a guy the other day, wanted to do one, but it's in Aztec. There's no left-hand turn. It's only on the right side because there's a median. So there's a lot of things that go into picking the right property. You've got to figure out your surroundings, whether utilities are close. If I was going to do RV storage or self-storage, I would want to have electricity there so I can have a gate that opens and closes. I would pick land that is not necessarily, we were talking about some vacant land up in the First Divide subdivision where it was all rock. That's not the one you want to be selling because you have a ton of dirt work that you have to do. So, you try to pick the cheap and easy one that's already pretty much set up for you.
Yeah, and you have to be prepared,
right?
Yeah, you have to be prepared to sit on that land for quite some time because vacant land, if you decide you want to exit that strategy and move your money into something else, vacant land usually doesn't fly off the shelf. So once you go, that's probably one of the things to consider.
Yeah, I can attest to that. I've got a lot of land listings right now. But, it's funny because people aren't retrofitting the old buildings much anymore. They're putting up new stuff. Like if we have fast food chains or something like that coming around, they're not redoing what we already have. They're buying vacant land and putting something new on it. But if I was going to try to develop, I would get with a developer or a builder first that wants to put up the money because we're having trouble with that subdivision that we're trying to do. But if we could get with a builder and try to develop land with that builder, that's a great opportunity that, and I would probably pick outside of town so that, when the expansion starts, that'll be right on the outskirts. And then at some point it'll, just like you're talking about in Phoenix.
Yeah,
I would look for something right outside of town
that can be annexed
as city grows.
Yeah, as it grows. Mm-hmm. Shannon, what are some of your thoughts on real estate investments that are maybe outside of the norm?
So I would say I've had something creative that a couple of my clients have done over the years is if you want to be in the real estate game, but you're not necessarily looking at buying or selling real estate, if you're in the position, lend money. I've had a couple people that have had large retirement accounts, things of that nature, and maybe they're not performing where they want them to, but they've been able to loan the money to maybe family or other people. I've had one that was arm's length and one that was family, and now you can get 7% back every year of an interest rate on that, which performed much better than their money sitting in a traditional account, whether it was an IRA or whether it was their bank account. So not everybody has that kind of money, and obviously that would depend. I'm not an accountant. Would depend on is it pre-tax money that you're pulling out of something, and now you got to pay it. I don't know all those logistics, but that is something to consider. Because interest rates are pretty high right now. And I've seen this a couple of times. And if you've got that kind of money, instead of investing it yourself, maybe, become the financing for it.
Yeah. And that's especially in this area, because we do a lot of owner finances where someone can go out and buy a property and turn around and sell it on owner finance and then charge a higher interest rate. Mm-hmm. And it's secured by real estate.
The real estate.
You can actually walk out and touch the home. You can walk out and touch the building. There's a bunch of caveats there. You want to do it in the right way. You want to convey it correctly. You want to make sure that that you have a realtor involved. I highly recommend that because we've navigated these waters many times. Have an attorney draft the real estate contract itself. But man, all that interest is front loaded. Mm-hmm. So you do have the ability to make a ton of interest in the first few years, build in a balloon, and then when that buyer pays you off, you take your money and go do it again.
Yeah.
It's a great idea. What about hard money loans? What's the difference between what you're talking about there and a hard money lender? Anybody want to jump in on that? So I'll take it. A hard money lender is someone maybe you don't know the other person per se. You're doing a lot more speculation and you're saying, look, I'm going to give you this money for a very short period of time to back this asset. And it's going to be time and a half or 2 times the normal rate of a mortgage. And you got to pay me back in 12 months or 16. So there's a short fuse on it. It's a lot more speculative.
It's called the VIG.
The VIG?
Yeah. This is loan sharking.
Loan sharking. Talking about. No loan sharking.
It did come in handy over COVID though, because then you were putting up essentially a cash offer.
Yeah.
Looked like a cash offer was essentially a cash offer to the seller. Mm-hmm. And then you just had to pay that back.
You're just getting money from someone else, not a bank.
Yep. You got to get in and refinance it pretty quick. Now there's rules to refinancing, and those change quite a bit. We just did a owner finance where we have 12 months for the buyer to pay off the loan. They went to refi like immediately, and the bank said, no, you got to let it season for a few months before we'll refinance you. And some banks view that as your primary residence. If it was your primary residence, others say, no, you really don't own it because it's an owner finance. You have equitable title, you don't have legal title, so it can't be a refi. It has to be a purchase. So there are some hoops that you do have to jump through, but that's a great way to.
I definitely think people have to do their research and make sure it works for them. But it is an interesting, creative way to get into the real estate game if you've got the money and maybe you're just not, I'm not into flipping. I'm not into buying and selling. There's other ways. There's other ways to have your finger in the real estate game.
Yeah. There is another way that's kind of in between, like super hands-on and then the REITs, which is really kind of a hands-off approach, and it's called syndication. And some of you have, we've talked a little bit about syndication, but when I was younger, I was driving around and I'm like, how do people buy these 200 unit apartment complexes? Like, who has that type of money? How does it work? Like, I was just intrigued on how that process works. 1,000 unit complex, some of these bigger mega complexes, like who buys those? So I really rolled up my sleeves the last few years and dove into the world of syndication. And syndication is where you have brokers that go out and they find these deals. These apartment complexes are trading hands all the time, and you find a good deal and you look at it through the lens of a business. This is a business, and how can I maximize this business? Are they underperforming on rents? Can we go in and update some of the units and then turn that business around? Because the bank, when they look at loaning on commercial property like that, it is solely looked at as a business. What's your profit and loss? How are you operating the business? How seasoned are the people that are running this all together? And one of the things I discovered through that is there are people that roll their sleeves up and are the ones that find the deals. And then a partner actually manages the deal, and a third partner actually structures the financing. And you can be someone that rolls your sleeves up and does that, or you can be someone that says, look, I love what you're doing, and it looks like I may make 20% on my money invested. I'll be an investor in this specific complex, in this specific area, which is a pretty cool thing. There's a little more risk to it, but a big reward. We've seen upwards of 20-25% return on money that has been invested in some of these projects. And at the same time, we've seen people lose their shirts, especially in the Houston market when there was the big meltdown. There was a lot of people that invested in syndications that didn't get their money back off. So they had to use it as a write-off, which can help too. So syndication is a whole different world, different ballgame. That could be something too, that depending on your level of, how much do you want to roll your sleeves up, or do you want to be a little bit more aggressive with your funds and see if you can get a higher return, but pick the properties and the management company that you feel is the best, for that investment. So that's where it comes into vetting the people that you're investing with. Other thoughts on ways to invest into real estate?
Something here that's not exceptionally expensive, but it is hard to find one, is the property tax certificates. So people that haven't paid their property taxes, you can actually essentially pay it for them. They can pay you back with interest within a certain period of time, typically 1 or 2 years. And if they don't pay it off, then you get the property. I have never gotten the property, but I have done a few of them.
Yeah.
But they're really hard to get. It used to be no one did it, and then it got really popular, and it seems like they're hard to find. But in the area we live in, property taxes are not high. So it's not as much money as some of these other markets where it's 20, 30,000 a year. Mm-hmm. You're looking at a few thousand. Well,
we had that happen with a commercial property that I had listed for years. It just was one of those properties that's just going to take the right buyer. And the gentleman I was working with, he was kind of the point man for this investment group. Well, he passed away during the middle of the listing. And then one of his partners calls me a year later and says, Ben, we don't own that property anymore. And I said, really? What happened? He goes, I didn't realize when this gentleman passed, he hadn't paid the property taxes for the previous year yet. And then a year went by, mm-hmm. and the new owner bought it for the back taxes, which were literally, this is probably a $400,000 or $500,000 commercial property. Bought it for probably $5,000 or $10,000 on the back taxes. A pretty incredible pickup for them. It was a hard blow for the sellers in that partnership.
That is, I'm surprised they didn't get more notification or anything, because they do notify them a lot that someone else is paying it and you have to pay them interest. Or
I think all those were going to the partner that had passed.
Yeah. I'm surprised that it wasn't. I don't know. That just seems weird to me.
It is, yeah.
That seems very strange to me.
It definitely slipped through the cracks.
Yes,
and they lost the land altogether. What about you? Talked about picking one up at auction. What was that process like?
That was actually my first house. It was a rough house. It was a complete flip, but yeah, all auctions seem to be online now. So you just go in and you just start bidding, and there's a certain period of time, and just like any other auction, you do have to have the cash to pay for it. Right
then and there. What are some of the pros and cons that you could think of?
No inspection is the biggest con. You really don't know what you're buying until you're in it. If you get a good enough deal, though, then that's fine.
Yeah. We heard of people like flushing concrete down the toilets and stuff.
We didn't have that. We did have, I'm pretty sure they were growing marijuana in the house or something, but they must have been doing other stuff too, because there was like grow lights all in the shed outside. And that's where I'm thinking they were growing stuff and like hanging stuff. But then inside there was like planters cemented into the ground. It was wild house, but it turned out really cute. Turned into a really good house.
Yeah. I mean, that's a big risk too. What about when you go to an auction like that, do they actually have conveyable title in the sense like a title insurance that they put on the property?
I don't know. This was a long time ago, and I haven't done one since. I tried to get a house on auction and didn't get it, and actually have a house listed that she bought from an auction, but I really am not super familiar with that process now.
I just talked to somebody that went through that process, I think like last year, and there's a time frame from the auction, like right after the auction's over, that the owner can come back and pay whatever that person paid for it. I think that's my understanding of that. I've never done it.
Yeah.
I don't know.
So they kind of have like a right of rescission?
Something like that.
Yeah.
But the current owner, whoever had the house up for auction, could come back and pay for what the other person paid. So you have to wait for a little bit of time till that is passed.
Well, what we typically see is like when properties go to auction, the mortgage company basically buys it back for what's owed against it, because if they could sell it, if they were going to sell it, they would have sold it and paid off the mortgage. And then usually there's not enough equity there or potential. That's where the potential of equity comes into play. If someone goes, ooh, that's only, they owe that much against it, but I can raise the value by improving it, I'll go ahead and bid on it. But most of the time, the bank just buys it back. And they've closed a lot of those loopholes over the years. We used to remember, Shannon, back in the day, it was like short sale. I got to short sell my house. And we were just dealing constantly with short sales to try to sell the property before it went to foreclosure.
Yeah.
And people were coming in and getting great deals. It became a great opportunity.
Took a long time though.
Yeah.
They weren't easy.
And you had to be very patient. But they've since closed those loops quite a bit. I think short sales are a thing of the past.
Yeah, I can't remember the last time I had one.
I'm seeing it on here about flips, and I realize that why we have so many, or we can't get contractors to come out and do work or do bids or anything like that, because I'm helping them buy all these foreclosed homes or these flipping opportunities, and then they're working to flip their houses instead of working on all of our all of the
Is that
projects.
What's causing the delay?
That's what I think, because I have 3 or 4 of them right now buying depressed homes that they're trying to flip either for family or to resell.
What about wholesaling? Who wants to maybe shed some light on that? Aspen?
Yeah, I can.
Yep.
So wholesaling is essentially whenever you as a wholesaler, you do not have to be a realtor to do this. You as the wholesaler makes an offer directly to the seller saying you will buy their property for, let's say, $200,000. I'm just going to use round numbers here. And then you'll have a 60-day window. And in those 60 days, you have the ability to back out and you can sell that property. So you're essentially selling the contract for more. And what that amount is depends on the different wholesalers. So some of them will try and get as much as they can. So maybe they have the $200,000 house and they're trying to sell it for $300,000. And it transfers from one to the other and closing all in the same day. Or you have where they'll say, okay, I'm getting it for $250,000. My fee is $15,000. So I'm selling it for that much over. So whatever it is, they're all structured differently, but
as a wholesaler, you don't actually ever own the property.
You never actually own the property because it all transfers the same day.
Yeah.
Yep. You're essentially selling the contract. It's very interesting. It's interesting that you don't have to have any sort of licensure to do that, but you don't. Yeah. So wholesalers, we're seeing them actually here locally a little bit more. One thing we don't see here at all is Airbnb arbitrage. Are you guys familiar with that?
No, fill us in.
So essentially, instead of buying a house that you're going to Airbnb, you find a rental and you Airbnb the rental. So we see it's a lot bigger in big cities where they go in and lease a condo and then they're Airbnb-ing it. You know, you do have to have permission from the landlord to do that. Or I know some people have gotten in trouble for just trying it out, but it's just you're renting it. You never actually own the property, but then you're subleasing it as an Airbnb.
So if the landlord says, hey, look, I'm trying to rent this for $1,400 a month. I can't really get anybody. And you come in and you say, look, I'll furnish it and I'll VRBO it or Airbnb it. And you make $3,000 a month. Mm-hmm. Then you're paying him $14,000 and you're keeping the difference.
Yep. Yeah. If landlords are okay with it. Here, actually, I think it would do relatively good because there's not a ton of Airbnbs and it's more private landlords. It's not big corporations. So I think you'd have a little bit more wiggle room, but I haven't seen anybody doing it here.
Yeah, that's interesting. I mean, that is something you could get in and not have a lot of skin in the game per se.
Exactly. It is a risk for a landlord though, because Airbnb, as personal experience, they can be very rough on the house. So, you know, if they come in and they wreck a bunch of stuff, if they break anything, you do have to fix it. So that's where it kind of is a risk for a landlord, which is why I think most of the time they say, nope, can't do that. But
sure. But I can see where that opportunity is, when, especially in the bigger cities where, you know, you have a lot of rental properties and maybe they're floating at 85% occupancy rate. So 15% of the inventory is just sitting. That'd be a great opportunity for someone that wanted to dip their toe into the real estate arena to say, look, I'll sign a 6-month lease with you at these terms. And as long as you're good with me doing an Airbnb and I'll manage it and all that, man, you could add a few $1,000s extra a month just off of one Airbnb.
Yeah, that Airbnb arbitrage is kind of the burr right now. It's the buzzword. It's what a lot of people are doing, but there's getting some pushback, especially from people that like live in these apartment complexes or condos that they don't want the short-term rentals. So
we're seeing the regulations come out and change. So that's one of the things for, you know, our listeners, our audience to understand is that you don't want to go all in on a single tactic. If you can diversify, it's always good because these rules and regs change all the time. There are HOAs that come in and say there will absolutely be no short-term rentals in this association. And then, you know, if you've put all your chips in that bucket, then you're in a hard spot. So, but there's certainly, great discussion. I think the audience can see that we've got plenty of options to get into real estate, to invest in real estate, and not just with the traditional buy a home, sit on it and resell it down the road, or buy, flip, fix and flip. There's all kinds of options you can get in depending on how risk tolerant or risk adverse you are and how much you want to roll your sleeves up on it. If you want to be hands off, there's options where you can invest in REITs, syndications, things like that, where you can invest the money and some are riskier than others. And of course, risk versus reward. But also, you know, if you want to roll your sleeves up, there's all kinds of opportunities out there for you to do that, to get into real estate. So please think outside the box. If you do want to add real estate into your portfolio, these are some great strategies to do. Of course, you can always go to sjcbroker.com and schedule a private consultation with any one of us, and we can walk you through some of these strategies and talk about the opportunities that are in today's market. Of course, if you like our episodes, go to our Facebook page and sign up for our newsletter. Like our Facebook page, we send out a fantastic newsletter every week. It has all kinds of great information. And we always want to be a client-first approach where we're advocating for your position and moving you forward toward your dreams and goals and retirement at some point. So let's sit down and have a conversation. Again, reach out to any one of us here at the Lyons Group. We'll be happy to help. Thank you for listening to this episode of The Den. Until next time, we'll see you then.
Thank you for listening to The Den, powered by the Lyons Group. Hit the subscribe button to keep informed on real estate happenings. If you'd like to learn more about the Lyons Group, visit sjcbroker.com. Complex markets require complex strategies. The Lyons Group can give you a true advantage in any market. Whether you're buying or selling, residential or commercial, contact us directly at sjcbroker.com. We're time-tested experts with a client-first approach, and we'll see you next time in The Den.